Bucking the trend of higher gas prices and taxes, Americans engaged in a little retail therapy last month, driving retail sales to their highest growth rate in 5 months. The reason? They're getting tax refunds and more people are working. Joe Welter follows consumer trends at Deloitte.
The retail business itself hired something like 24,000 people this last month. So, the job market and the opportunities there and a little bit of optimism about retaining jobs, all of those factors are real positive.
Welter adds that higher home prices and a rising stock market and lower savings are also helping fuel consumer spending. Key here is that core sales went up. That excludes things like gasoline, car purchases, and building materials. Economists watch that number closely because it corresponds to the consumer spending component of GDP, and it tells us a lot about the broader economic picture. Telsey Advisory Group Senior Retail Analyst Joe Feldman.
We think that the recovery is for real and that we've seen stable growth. We don't expect, astronomical rise in the growth rate of the GDP, but still 2-3%. That's steady growth, and that's what we think we're going to get. That supports retail sales in that 2-3% area as well, maybe even a touch higher.
Especially for retailers whose fortunes are tied to the escalating stock market and improving housing sector.
You've seen improving trends, especially as the stock market's done better. You've seen better trends at some, a Nordstrom or a Saks. They tend to go hand in hand with the stock market. At the same time, the home guys have done very, very well. Home Depot and Lowe's and all the home furnishing retailers, from Pier 1, a small company we cover, Tile Shop, Ethan Allen has done well. So those categories have done well.
But economists warn tax refund checks may have temporarily put off the pinch from higher payroll taxes, so the spending could sputter a bit later this spring.